Good day everyone, this is Viet of Axis Partners and welcome to my weekly Sunday video. Today is Sunday 26th of July. My apology for not being able to record a video last Sunday. I was occupied with final preparations and setting up of my automated trading system. Towards the end of this video, I will discuss the trading accounts that I have made public on my blog. First up, Aussie USD. Now, 3 weeks ago, I missed the break of the 0.7750 level because I was away on vacation. Since then, this pair has been moving sideways with massive price action until Friday, where sellers have made a decisive move to push it down to the 0.7250 area, where I have marked down as weekly support. I had a short taken at 0.7400 on the 16th and I closed it at 136 pips for 1.5 times risk reward on Friday. The trade was taken on the high risk account. Going into next week, a daily close below 7250 will be my signal to start planning another short trade for this pair. On Wednesday, I entered long on the Euro New Zealand dollar at 1.6520 and the trade was closed out on Friday at plus 140 pips for 0.78 reward risk ratio. The trade was also taken on the high risk account. On daily chart, price already had one rejection from the 1.6800 resistance. So if this level is tested again and price action shows signs of reversal, then I would be interested in going short if other conditions are met. Moving on to EURUSD, a very recent downtrend has started on daily chart. You can see here, we have lower highs and lower lows. If price comes up to retest 1.1050 resistance, I will be looking for opportunities to enter short. Alternatively, a daily close below this short-term support, the dotted line on my chart at 1.0820, would be another sign that I look for to start planning for a short. Last but not least, USD Canadian dollar, where price has reached the 1.3050 weekly resistance level. On Fridays, buyers tried to push above this level, but the day ended with a close below, so to me, it is still acting as resistance. Interestingly, there is a reversal to be taken on Monday for the more aggressive traders. Personally, I want to see how Monday's candle closes first before doing my risk analysis for this pair. Looking at the news calendar for next week, Wednesday would be very interesting because we have FOMC. All eyes are on the Fed, and many speculations have been made about when or if USA will raise the interest rate this year. If you are trading on Wednesday, then be aware of the extra volatility, particularly with the USD pairs. And that concludes my analysis for next week. Stay with me if you want to hear me talk about the live accounts that are on my blog. Otherwise, I wish you a profitable week in the market and I'll speak to you again in 2 weeks. Next weekend, I'm going to Scotland for a short break. I have added my FX book links to 3 of my live trading accounts. You can find them on the top of the page at my blog. There's the PAM growth, the trend following, and the high risk account. The growth account is tracking performance of trades that I discussed in my weekly video. The trend following account is tracking a system that I have been working on. It is 100% automated. The high risk account is not for performance tracking because it is for trades that do not meet all of my requirements, hence the name high risk. There's a couple of reasons why I have made these accounts public. First and foremost, I want to be accountable for what I say and do. There's no point for me to do my analysis if I do not have the courage to follow up with what I say. Anyone can look back at the chart and say, I would have entered this trade here and exit there. But in trading, talk is cheap. I can make all the claims in the world, but if I cannot provide evidence to show that I am capable of trading the way that I say I can, then my words are meaningless. So that's why you will be able to verify all of my trades from those MyFX book links. Secondly, now that my automated trading system is online, I would try to avoid taking trades in the opposite direction. So by showing the automated account, I can reference those trades and you can see that I don't take them because the opposite trade is open. Again, it's for you, my audience, to know that I am not simply just making up an excuse to cover for hesitation or lack of confidence in taking my trades. You can read more about each of the accounts on my recent blog post. That's it for me for today. See you in 2 weeks' time because I'm in Scotland next weekend. Bye for now.